please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome. You're watching Your Stock. Some news flow coming through. There are comments coming in from PNB to the exchanges. So basically, Sebi has cautioned PNB and the same is being notified down to exchanges. There are a couple of observations that have come in from Sebi. The first of them is that Sebi says there have been delays of between 1 to 6 days by PNB in making disclosures to the stock exchanges pertaining to the filing of reports or complaints with RBI and the CBI. Accordingly, they say PNB has not complied with certain regulations of Sebi which require these to be done. Additionally, they say PNB has not made any provision or disclosure with respect to a fraud of 280 crores in the financial statements for the quarter ended December 2017 and thereby not complied with Clause 1 of Part A of Schedule 4 with certain regulations of Sebi. That's not all. They go on to say that the aforesaid non-compliances are viewed seriously and that PNB is hereby warned and advised to be cautious in the future to ensure compliance with all applicable provisions of Sebi LODR regulations. So quite a tough stance actually being taken by Sebi now in relation to PNB.
That's right. You know, just this morning we got the news that in fact they may not be admitted to PCA, that's prompt corrective action. So there was a bit of a relief rally out there, but this is not good news. Basically, they're not complying with some of those listing norms, and that's why in fact Sebi has issued this warning to PNB. Those are the details that are up for you on the screen. There have been various delays, there are various provisions that they have not made, and that's why in fact the stock, after trading with some gains, has come off the high point of the day. Lata joins us as well in the studio to run us through her understanding of this. Lata.
But I think this looks like it will be a protracted legal battle. Now, I'm sure PNB will have to reply to this corporate governance issue. What bankers told us initially when these questions cropped up, that CBI had indicated to the bank that don't make these disclosures because they want to take over the case and study it. Okay. So I think the bank was just poorly advised, if this is what Sebi is saying. But I don't know. This is hearsay. We have to see how the bank will react to this issues made by, the charges made by Sebi. And there are several regulators involved. I mean, RBI is also involved and the government also is involved. So this becomes a little tricky. Right. After all, if CBI wanted to investigate the case and wanted to keep it low-key, so that they can go and lay their hands on evidence, then, the government as shareholder has probably given them that directive, in which case, it becomes between majority shareholder and minority shareholder. Majority shareholder is telling you, don't tell the minority shareholder. Is that the way to look at it? Or is it a law and order problem that somebody has run away with money and therefore I'm telling you not to?
Rap on the knuckles, you think? Because they say that PNB is warned to be cautious in the future. It doesn't mention much about whether... this the action so far itself would entail a penalty, but in the future they have been warned.
I missed that. So it's only warned and told off. Then I guess the impact.
That's my understanding is that they have just been warned. It's the last line, number 4, which says that aforementioned non-compliances are viewed seriously, and hereby PNB is warned to be cautious in the future to ensure compliance with all the applicable provisions. So it doesn't really say that the action so far will merit any sort of penalty.
Okay, I guess in that case it's only been told off, and therefore there is no further discussion on the matter. But it's perhaps a warning to other banks that in future, minority shareholders and their rights will also have to be protected. And therefore, when you get to know of a heist or a fraud, minority shareholders have a right to know. Okay, in that case, it will have a minor impact on the stock itself.
Okay, I think, Lata, we have Sandeep Parekh of FineSec Law Advisors who joins us as well. Hi, Sandeep. Thanks so much for joining in. Well, what is your understanding of this? Is it a rap on the knuckles, or do you think, PNB is in for the long haul in terms of this legally? Your understanding?
So if you can just, if you can help me understand the facts.
So basically,
Sebi's given a warning for not disclosing the CBI rate, or
they have warned PNB. They warned and advised them to be cautious in future to ensure compliance. They're basically saying that they have delayed various disclosures on various parameters. The bank did not make any provision with regard to a 280 crore fraud in Q3. Now, do you think that in fact they're just sending out a warning, or do you think it can have further implications going ahead as well?
So, based on the language they've used, it seems it's a warning, and they're not initiating a separate action.
Okay. So Sandeep, what is the impact on PNB itself? It's nothing. This is just an example for future such issues.
Yes, it seems like that. You know, ultimately, some of these issues are twilight zone issues. For example, if a CBI comes into your office, are you supposed to report that? Are you supposed to put that in public domain? I mean, those issues are kind of somewhat in a grey zone. So there's no clear, a clear guideline on whether you need to disclose that factor or not, because you're not being convicted, you're not being charge sheeted. It's a very preliminary stage of investigation. I think the PNB is particularly bad example in a way, because so many facts are out in public domain and a lot of fraud has been acknowledged.
Sandeep, I have one follow-up question. There are two points on which SEBI has cautioned, right? The first one, of course, is a delay, in which case they have not mentioned any specific case. It's a delay of 1 to 6 days on various accounts, right? The second is that they say PNB has not made any provision or disclosure with respect to a fraud of 280 crores in the financial statement. Now, this is a particular
financial statement of the December quarter.
Yeah.
So they've told PNB that you discovered this and you didn't provide
in that quarter, and you've showed it subsequently. So this becomes a particular case, right, which the SEBI has pointed out. Do you think on this itself there could be some legal bearing that may come to pass later on?
Right. So this can become a bigger issue. You know, again, if you remember, Lata, you've done this whole show of the August circular of SEBI last day, right? Where the disclosures were being mandated.
Yes.
For all kinds
divergences were mandated.
And there was obviously having RBI kind of pushback and all that. I think so. SEBI is kind of pushing its. If you've seen the new proposal on amending the listing regulations, again, it's trying to improve the standards of recognition and disclosure for default. So I think they will probably push it on a systemic level. They may not go against PNB in this case, because right now, all the banks have taken a lot of liberties over the last 5-7 years in terms of the recognition of NPAs. They've been kind of kicking the can down the road.
Okay, this is more like SEBI bearing its claws, as it were, on this issue, and more such warnings can come, right? That's the point you're making.
Right.
All right. Thank you, Sandeep, for joining us with your quick take. No immediate damage to Punjab National Bank, but what Sandeep is pointing out is that exactly what Sumaira is saying, that henceforth, if there is an instance of a knowing default, which banks have not provided for, not just RBI, but SEBI will be proactively monitoring it. That's important, but I think Bajaj Finance is more important.
Yeah, Bajaj Finance, in fact, they come out with a set of numbers. They're looking quite good. The NI number that we have is better. We have the net profit that's better, and the gross NPA number, in fact, has improved the percentage on a sequential basis. The last quarter was at around 1.68 approximately. The street would have been happy if it didn't go to 1.8%, or that's the poll that Abhishek threw up. And in fact, it's come in at sub 1.5%. So the asset quality as well has been maintained. The NI is better, I think, by around 50 to around 80 crores, and the net profit number as well. This will go down as a beat.
Provision cover ratio.
Yeah, that's 75%.
Even that has increased to 75%, if I'm not mistaken. So, this is the quarter when NBFCs have been moved from 180-day loan recognition to 90-day, and in spite of it, the company has come with asset quality numbers which are much better than the quarter ago numbers, both net and gross NPA. So, and I think the provision cover ratio number will just run. See, look at the provision coverage ratio. It's increased by 7 percentage points. So that is as safe as it gets, much safer than a bank, you would say.
Yeah, also they've said that during Q4, the new loans booked have increased by 51%. So that's, looks quite good actually. As well, loan losses and provisions for Q4 has come in at 274 crores, which is just a shade below the 287 crores that they had seen in the Q4 of FY19. As well, assets under management have now grown to nearly 80,500 crore rupees from 60,000 as of March 2017. So as of the 31st of March,
30% growth in assets under
growth in assets on a Y-on-Y basis. So that looks good as well. And in terms of more details, Nigel, you have anything more?
No, that's that's precisely all the details that we have. I think even the number that just came up for you on the screen, the AUM growth, well, we are working with a number of around 35 to 40%. It's come at around 34%. So you can't really fault these numbers. Initially, we saw some kind of profit booking, but now the street is taking note of it. It's been a big outperformer, and the numbers are really justifying that. On all accounts, it's be it the NI, the asset quality, the net profit, as well as the AUM growth. A thumbs up for Bajaj Finance for the time being.
You know, also more details in terms of, this is the consolidated number, of course, that I'm talking about of Bajaj Fin and the housing company. Consumer lending has seen a 44% jump, okay? So that is looking good, and that's, of course, the largest...
These are year-on-year numbers, and we must remember that Bajaj Finance was the only company which proactively said in the demonetization quarter, which was the year-ago quarter, that they are going to curb lending. So, I mean, you should expect that they must have gone into a shell in the 2 demo quarters of October, December and Jan-March. And therefore, obviously, the year-on-year numbers look excellent.
Okay, so that's boding well. That's a word on Bajaj Finance. Let's take a quick break, then we'll come back. Lots more earnings reactions to focus on, lots more stock queries as well to be answered. Stay tuned. The company on our radar now is Take Solutions. They've posted a good set of numbers in this quarter. The revenue was up 28% on a Y-on-Y basis, and the margins have been steady. Srinivasan HR, the Vice Chairman and MD of the company, now joins us on the telephone line. Hi, sir. Good afternoon. Thanks very much for joining in. So it looks like it's been a good quarter for you. In fact, FY18 itself also looks good. In terms of margins, you've almost neared that 20% mark now. Do you see some more headroom in FY19?
Certainly, I think it's been an awesome quarter for us, the best ever quarter. So we've grown in revenue terms, and some of that revenue growth is rubbing off on the improvement in margins. So as we move into, or as we are in FY19 now, we should see the impact of stronger margins with the growth momentum that we are having. If you look at even in terms of revenue growth, while you pointed out that it's about 27.68% year on year, quarter on quarter it is about 11.25%. And if you look at our life sciences segment, and over the last 12 quarters, our compounded quarterly growth rate is a little around 8.5%. So we're seeing extremely strong momentum in the life sciences business and feeling confident about the growth there.
Okay, all right. Just hold on to that thought, sir. I think we have some details coming in on Gujarat Pipavav. The net profit's been a bit of a miss, but I think we have some qualified opinion that's coming in from the auditor as well. So I think we should flash that as well up for you in the screen. These numbers look a tad bit lower than what we have put up. Both those two numbers that we have, the revenue number as well as the net profit number, it appears that it's missed estimates. The revenue number has missed by around 10%. And in fact, the net profit number has missed by more than 20%. So we'll keep an eye out on that front, but I'll be interested to see what exactly has the qualified opinion. What's the qualified opinion from the auditor? And if you could get some of those lines as well up for us on the screen, that'll help our cause. Sumera, have you pulled up any of those?
Yeah, I'm actually just going through it to figure out where it is. But so far, I think I haven't yet managed to find where exactly it is. We'll come back to that. I think maybe we'll have Ekta joining us. Okay. It says, in our opinion, and to the best of our information and according to the explanations given to us,
I think we'll just wait by. We have the margins as well that are flashing currently on the screen. There's been some a contraction out there as well. So it appears it's a top line to the bottom line beat out there. So top down miss is what we have seen. The top line has missed by around 10%. The margins have got compressed by around 500 basis points, if I saw that number correct. The EBITDA number as well has missed our estimates by nearly around 18 crores odd, and the net profit. So it's going down as a disappointing set of numbers, but we'll wait by to see what exactly the commentary has been from the auditor. For the time being, let's go back to our discussion we're having with Mr. Srinivasan. Well, sir, sorry for that. But if you could give us some kind of an outlook, what's the growth you're expecting in the coming fiscal in dollar terms, if you could help us out with that? And also give us your geographic breakup in terms of revenues and how do you expect the various geographies to grow?
Yeah, so in dollar terms, if you even look at the year that went by, our dollar growth rate has been about 22.83% or 23%. I would say that going forward also you should expect a growth rate between 22 and 25% in dollar terms for the next 2 years. That would be the top line. But in terms of the geographic spread, about 80% of our business comes from the United States, and that's going to be the strongest area of growth. 6.5% comes from Europe, and the rest comes from Asia Pacific. In terms of that, maybe I should call out that over the last 2-3 quarters, we've seen the business in Asia Pacific pick up a lot of momentum on the back of performance of not only Indian pharma companies, but those in Thailand, Korea. We're seeing some good traction around those markets.
So, Mr. Srinivasan, you said how much comes in from the United States?
80%.
80%. So, weaker rupee is good for you then?
See, in the sense that helps only on the balance sheet translation side. We also consume a lot of dollars in costs.
Okay.
So, in terms
so it sets off each other.
Business,
so it sets off each other. All right. Sir, we're a little short on time, so we can just move forward and ask you, how many clients have you added in the last year, in the last quarter? And what's the order book visibility going ahead?
So in the last quarter, we've added about 7 new clients, but then overall for the year about 23.
Okay.
But the order book has shot up. We were about $163 million at the last quarter. Now we are at $189 million in order book.
Okay.
So it always,
Okay, so that's good news. Finally, sir, what is the current receivable days? I believe it's on the higher side. And give us a sense about your balance sheet. How is that looking?
The balance sheet is strong. Actually, the receivable days have come down from 110 days in the previous FY to about 93 days. 93 days. So there's actually been an improvement in the receivable days.
So that's good news.
And the balance sheet is strong. We have cash and cash equivalents of about 390 crores.
What do you do with that?
Well, we built up a chest for the purpose of acquisition. So we've been looking around for acquisitions as and when we find an appropriate company that adds synergy value, both revenue and cost synergies, we will try and make an impact in the North American market. We'll
wait by then for that, Mr. Srinivasan. Thanks so much for stopping by and giving us all those details. All the best for the remainder of this fiscal. Well,
Anisha has actually sent us the qualified opinion on Gujarat Pipavav. It relates to the earnings reported by an associate company, which of course has not been audited by the same auditor. So we'll have Anisha joining us in a bit to explain that for us. Meanwhile, Skipper also reporting numbers, and on the net profit, it looks like a bit of a disappointment actually. So the stock is down about 6% now, but this is a company you've been tracking quite closely, Nigel, haven't you?
How that's what, every time it promises, but delivery is something that the street was looking forward to in terms of their transmission business. How much can they give? The stock has corrected a goodish deal from around the 250 odd level. So those numbers are not looking extremely encouraging because you have a revenue growth of only around 5% for all the talk about, transmission. It's only come in at around 5%. And I would like to look at the EBITDA number as well. The net profit has seen a degrowth. So we'll have to wait by to see whether or not it's an operational miss. It appears that's the case. 40% lower when you have a top line growth of around 5%, and yet you see your operating profit comes down by close to around 40%, telling you that the margins would get compressed sharply, and that's why the net profit has seen a decline as well. We'll wait by to get more clarity on those.
All the segments over there, it's like almost nothing is, doing better because engineering, polymer, infra, whatever you look at it, there seems to have been some bit of deterioration in the top line for all. In fact, in terms of the EBIT performance, it's only engineering, I think, which has sort of saved them the blushes, so to say. But there as well couldn't help very much. But let's take a break. We'll be back with more in a bit. Stay tuned. Focus on some results. Gujarat Pipavav came out with numbers just a short while back. There's a qualified opinion from the auditors. Anisha Jain joins in to make sense of that. Anisha, this relates to an associate company, is it?
Well, yes, I don't see, in my limited understanding, I don't see it as a very serious observation that the auditors have given. This is not a going concern or any other issue that the auditors have pointed out. They mentioned that they have not received the books from an associate company, and that's why they have qualified opinion till that limited number of around 23 odd crores, saying that we do not know what lies in those books because we have not audited that particular book. And the management has replied to that and said that a part of it is owned by the government, and they're waiting for the CHU audit or Comptroller Audit General report to come by, and only then they can say what really the number is. So I don't see that particular qualification to be very important. Also, the auditor has not really mentioned whether this is the first time that they have qualified this report or it has been a repeat observation. So till that part, I think it's not big issue. But what is actually making the stock go lower is the operational performance of the company, which is a miss. Now, it's a top line miss by the company. Of late, we had seen a bit of weak performance coming by Gujarat Pipavav, but this quarter we were expecting a better performance because there were 2-3 shipping lines that were added, and the hope was that the volume would come back. We have been knowing that they have been losing market share to Adani's Mundra port, and we were hoping that with this additional lines coming in, that will happen. But on all parameters, whether it's a top line or the margins or the profit, it's below estimates. Back to you.
All right, Anisha, thanks very much for that. We'll wrap up then on your stocks. Do remember that to send us your queries. We have Ladies Special tomorrow. We'll be answering all the queries that are being sent in by our women viewers. Do send in to us, post it on our website. Thanks for watching. Closing Bell will take you through the last hour of trade.